Well, it's the end of the month, and like always, all eyes will be on how the volumes for Motown will pan out, especially given how lockdown has been easing over on a weekly and on a monthly basis. One would want to see what are the trends that are shaping up. So we expect largely the volume trends, the volume recovery rather, to continue in the month of July as well, picking up from where exactly it left off in the month gone by, that is June 2020. For two-wheeler sales, we expect it to be comparatively better, led by pent-up demand and a preference for personal mobility. Do remember, the managements of Bajaj Auto as well as TVS Motor both flagged off that eventually they do see the trend trickling in, given the heightened preference for personal mobility, which will augur well for two-wheeler makers, and that's something which at least now we're starting to see some signs of. Talking about two-wheelers, Bajaj Auto, we're expecting a figure of close to 3 lakh units, which is an uptake of 8% on a sequential basis. However, on a YOY basis, which is not very relevant at this point in time, but still if we compare it, it's close to 21% degrowth. Hero MotoCorp, our poll indicates to a figure of 5.25 lakh units, again a 17% growth on a month-on-month basis. TVS Motor Corp, 2.25 lakh units to have been sold in the month gone by, 14% uptake from June. Royal Enfield, we're expecting 39,000 units to have been sold, flattish on a sequential basis, but still a 3% growth nevertheless. As far as PVs is concerned, the recovery is likely to be driven by necessity-based demand. Even Maruti did flag off that first-time buyers are the ones which are walking in, where inquiry levels are also high, and even entry-level segments and the cheaper cars are likely to attract more traction. But looking at the poll for Maruti, it's 1.08 lakh units according to our poll, which is a solid 88% growth. The volumes are almost likely to double if you look at how they transpired in the month gone by, which is June again. 1.8 lakh unit is what we're factoring in here. For M&M Auto, we're expecting a growth here as well, a very robust one. 28,200 units is our estimate. Rural demand is sustaining well and is likely to do well this time around as well, especially translating into good tractor figures. Tractor demand continues to hold up thanks to strong rabi crop and good monsoon. We're expecting Escorts to hand in 5,600 units. For M&M Farm Equipment, 23,000 units is our poll, and both on a month-on-month basis are likely to see a mild contraction, but I don't think that's very alarming at this point in time. It's actually perhaps seasonality that has come into play, but on a YOY basis, perhaps tractor space is the only one which is likely to see a healthy growth. 15% YOY growth each expected for M&M Farm Equipment as well as for Escorts. Finally, coming on to CVs, still likely to be very much under pressure, significantly under pressure. We're expecting VECV to deliver 1,850 units, Ashok Leyland 2,650 units. Yes, it's an improvement month on month, but the quantum still very low. Barring LCVs and ICVs, the medium and heavy CV segment definitely continues to really be weak right now. Let's see how the month of July pans out, if at all there is any uptake or any sort of positive commentary coming in or positive outlook coming in from the managements. But this is how the picture looks as of now. Let's see how the numbers pan out.